Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management e-News. Thanks for joining us. So we don't have a whole heck of a lot new from our last e-News to talk about, other than to remind a lot of you that market timing doesn't work, that it's time in the market rather than trying to time the market, which is how you're going to be successful in investing. And we have yet some more proof of that very recently. So we remember Liberation Day on April 2nd when the tariffs were all announced. The market actually hit a bottom in that period on April 8th. But since April 8th, the S&P is up 17%. And so, depending on which side of the aisle you sit on, for some of you that are not Trump supporters, you were probably sure that it was going to get much, much worse before it got better, and markets sort of bounced, and we've seen a huge move higher. I'm not taking sides on this. All I'm here to say is that you cannot time markets, because this is yet another example of many of you thought it was going to get much, much worse. And that's not to say that it couldn't, right? Of course, but we've seen a tremendous bounce off that April 8th bottom, and a lot of people were quite nervous in the beginning of April before the market bounced. Now, we expect volatility will be sort of the name of the game for the remainder of 2025. It doesn't mean, though, that we can't have a decent year for equities. Remember, we're coming off two 20+% year returns for stocks, and so they were certainly due for a breather, whether we got this tariff situation or not. And so we would expect volatility for the remainder of the year, but that doesn't mean we can't have a constructive year for the stock market. And so we just have to continue to remind you that when you want to make some big dramatic change to your money, remember these periods when we see a ton of volatility in a short period of time, and you all want to do something because that feels right. And usually when we're getting this kind of volatility, the best thing to do is nothing. So just another example of why we can't time markets.
One of the things that we talk a lot about on both our radio show and the e-News and relative to markets is, in markets, everything is relative to expectation. And what was really hard with the tariffs initially in early April is expectations were drastically missed. The market had totally mispriced the reality of what was going to happen, and no market participant reasonably thought that they were going to be of the magnitude that were announced. And so, of course, we got that brutal sell-off in right after Liberation Day. But what's happened subsequently is the market has started to learn how to price sort of these various declarations coming from the administration. Of course, you got the increase on Friday of steel and aluminum tariffs, doubling from 25 to 50%, and some additional threat rhetoric aimed at China and non-compliance with the existing agreement and everything else. But the point is, the market has sort of started to look through those threats and other declarations and look at the underlying reality of what's really changed, which is ultimately not much. And so I think next quarter we'll revisit the reality of earnings are ultimately what drives stock prices, and the market will be much more focused on earnings. But one last thing I wanted to touch on is just the reality that diversification has worked extravagantly well in 2025. Here we are today, markets sort of waffling back and forth on the black and red line, but international stocks are trading 1% higher and are now up something like 17% year to date, which has been a portion of the portfolio that underperformed dramatically for years and years. But in 2025, diversification is working, and it's working well and to the benefit of all of our portfolios.
Yeah, in the beginning, remember the beginning of 2025, there were literally, it seemed like daily tape bombs where the president would come out and make this big declaration, and the markets reacted violently one way or another. And those tape bombs keep coming from the administration, but the market is sort of realizing, oh, wait a second, this is going to be a common theme. We're going to get a lot of this daily from the administration, so we can sort of look through it more towards the reality of it. And so hopefully the extreme volatility we saw in the beginning of the year will subside, and markets will look past and really at what counts, which is earnings and earnings growing over time. So as always, if you have questions about your situation or your account, give us a call at the office, 877-670-7117, or you can email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.